Shanali and I are sitting here right now with Penny Pennington. She's the managing partner over at Edward Jones. 9 million clients, 20,000 plus financial advisors. And I assume those advisors are having to counsel a lot of folks these days, given the volatility that's going on in the markets.
Absolutely, that's our job. And times like this in the market are when we really shine and when financial advice is so important. We just heard Secretary Bessent talk about explaining some of the things that are going on from a policy standpoint, and all of that comes home to roost with the American investor. So the conversations about trade, about taxes, about deregulation, about interest rates, all of that affects our clients' medium and long-term plans.
You have a lot of views from your clients in terms of how it's affecting their pocketbook, how it's affecting their retirement planning, and how they're affecting their businesses, frankly. And it's small and medium-sized businesses that are seemingly getting disproportionately impacted right now relative to those big companies. What does Main Street really feel about this plan from the administration?
All of the policy changes have actually not hit Main Street. What is the conversation today on Main Street and at kitchen tables all across the United States is, what will this mean? What will we see in terms of tax changes? What will we see in terms of changes in prices in goods and services? One of the most important elements of being a small and mid-sized business owner today, two things: the taxation of the income on your business, and the Tax Cut and Jobs Act equalize that taxation for small and mid-sized private businesses. We believe it's very important for that to continue. The other thing that those business owners are really wrestling with today is the intergenerational transfer of their businesses. Do their kids want to continue this business? Is it fit for sale? And where does the capital come from to pass on that business? So there's $124 trillion asset transition, intergenerational wealth transfer happening today. Much of that has to do with small and mid-sized business, our clients who are helping make sense of that whole process.
So if you do have that transfer going on, how important is the tax discussion in Washington right now? And what would you ultimately want to see from that tax package to help all of your clients be navigating through what's been a pretty significant hit to their pocketbooks this year?
Well, by and large, what we'd all like to see is just a little more certainty. There has been some fluidity in the policies that are being announced from the administration. As soon as certainty, a certain amount of certainty prevails, then businesses, families are in a better position to plan. And that's why financial advice is so important. What we do is help our clients turn their life plan into a financial plan, visualize that. More than half of investors say the hardest thing they've got to navigate is the multiple goals that they're trying to deal with all at one time. And so a good financial plan helps them visualize that and then flex it, do some scenario planning.
Well, let's talk about that planning, particularly in the here and now, because when we talk about allocation to portfolios, you know, the traditional 60-40 that worked for a while, maybe it works today, maybe it doesn't, but a lot of people look at that 40 and they're not just looking at fixed income. They're looking at real assets. They're looking at private assets. Assets for a lot of individual investors they have not traditionally had access to. That door is opening. Is that opening at Edward Jones as well?
Absolutely it is. So you're talking about the evolution of a well-diversified portfolio. What is fundamentally important is that an investor have a portfolio that matches their risk tolerance, matches the returns that they need to get for the opportunities that they're trying to create for themselves. So the level of diversification is unique to each person, and the type of assets that should be in that portfolio is also unique. A well-diversified portfolio of public credit and equity works great in many, many circumstances. But as wealth increases, as complexity increases, access to greater asset classes and to private credit and equity is important.
And you pushed the company further into this space. And I want to ask you a sensitive question just about the identity of Edward Jones, because there has been a lot of talk that as you push in that space, You're going after higher net worth individuals. I think most people think of the Edward Jones brand as being much more middle class, for lack of a better term. Are you moving away from that?
We're not moving away from that. I am real proud that Edward Jones has helped the middle class thrive in North America for 100 years. We have always helped people who want to establish, grow, pass on, and give away their wealth multi-generationally. We've been doing this for 103 years in more places across America than any other wealth management company. We have a brick and mortar location in 2/3 of the counties of the United States. We have a client in every county in the United States. We are where North America goes for advice. And we want to help people earlier in their saving and investing life, become more financially resilient, create more opportunities for themselves. But it is also true that people are becoming wealthier. The complexity of their needs is greater, and there is actually less and less financial advice in the marketplace. We have been there to fill that gap for decades, and we intend to continue to.
Penny, one thing about the private markets that I'm interested in is, on one hand, clearly there's a need. There are so many fewer companies in the public markets. You need those private markets to have a greater investment opportunity to reach more of society, frankly, as an investment choice. On the other hand, they tend to be higher fee products. And by the time they get to the retail investor, the individual investor, the person who could put $1,000 rather than $1 million into the investment, is there going to be a big drag on performance? Are there going to be other issues that are created in the way that these products morph to reach the individual investor?
I think you're raising the right questions. These are the questions that we raise as what we call ourselves the informed buyer alongside our clients. We're in the middle there, talking to product manufacturers about how to enable retail investors, individual families across America, to get access to the products and services that they need, but also to know what to expect in the experience they're going to have. The private markets are less liquid, they are higher risk, and that means they're not for everyone. But to ensure that the way these products are structured are things that we can explain well to our clients, that they can accept, and that they can have in proper proportion in their portfolio, depending on their risk tolerance and their liquidity needs.